information in this presentation is for educational purposes only and should not be considered investment advice. Past performance is not indicative of future results. Investing in financial markets involves risk, and investors may lose some or all of their investment. Investors should consult with a qualified financial advisor before making any investment decisions. This presentation is not an offer or solicitation to buy or sell securities or financial products. This material does not constitute an offer or a solicitation to purchase securities. An offer can only be made by the Private Placement Memorandum or PPM. This document is an informational summary of the prospective investment opportunity only. The PPM and its exhibits contain complete information about the fund and the investment opportunity. This presentation has been prepared to summarize such information for prospective investors in the fund. The information contained herein is not a substitute for an investor's complete review of all of the information attached to the PPM as part of their own due diligence regarding this investment opportunity and its suitability for their investment portfolio. NASDAQ, Invesco and QQQ are registered trademarks of their respective companies. This fund is not affiliated with either company, and the use of these trademarks does not imply endorsement by either company.
Awesome. Well, welcome everyone who's maybe just joining in. Laban Johnson with Abundance Asset Management here with CEO Chris Perkins and our Chief Trading Officer. We just wrapped up the first half of June 2023, and we wanted to check in with everyone. So hopefully you guys can join us in our chat if possible. And if you have any questions, let us know. Chris, check in. Let's see what's been going on with you and with the fund and all.
Yeah, for sure. Right now, the fund is only 10% allocated to stock, which is a little bit lower than we want it to be, but things have just been on a tear lately with the QQQ in a new bull market officially. That happened March 17th, actually. So a bull market is defined as the index, whatever you're trading, up 20% from its bottom. So ironically, both the S&P 500 and the QQQ both bottomed on October 13th last year, 2022. So the bottom for the S&P 500 was 348. That's a SPY, SPY. $348, and the QQQ bottom was $254.26. So it took a lot less time for the QQQ to recover into a bull market, into a new bull market, than it did for the S&P. So S&P 500 made it into a bull market at the end of May 31st, and the QQQ, March 17th. Interesting.
Indeed. So what do we take from all that?
Well, I take that there's 400 companies in the S&P 500 that are underperforming, right?
Wow.
So you have 400 companies that are just kind of dragging it down.
Mhm.
And if you think of like 100 companies, is a lot easier to move. People think of the QQQ and the S&P 500 as having like a concentration risk where the majority of the money that's in the S&P 500 or the allocation from the S&P 500 and the QQQ is in the top 10 companies in the world, because it's all based on market cap weighted, right? So essentially, wouldn't you want your money in the best companies in the world though? I just, to me, that makes sense. It makes sense to have the majority of your money in the companies that are essentially running the world with innovation.
You would think, right?
Yeah.
It seems like common sense.
Yeah, and there is going to be volatility. Of course, there's going to be volatility, but it's just how do you use that volatility to your advantage instead of your disadvantage, right?
Mm-hmm.
And that's exactly what we're doing with our trading strategy, right? Selling volatility. And if you're buying volatility, it's very risky, because when you buy volatility and the volatility goes away, you can be right about stock price movement and still lose. So that sucks. Right. It sucks being right and still losing money.
And both, I mean, whether you're going by price or you're going by volatility, you're still looking backwards to try to kind of guess what's going on forward, right? Even volatility as the index, that's still looking backwards on what's already happened, trying to gauge, what the trajectory is, but it's not, it's not 100% accurate ever. And, we were just we just recently published some articles on volatility, and that was one of the points that we made was that there's still risk involved,
Yeah.
even if you're using this as it's an indicator among many other things, right? But you still have to look at everything and make wise decisions.
And make decisions not based on emotion, right? Because like, so since the bottom, there's been some serious volatility. The QQQ has been up 5% in a day and down 5% in a day. Like, it's been a wild ride, right? And that's typically how these things work. Look at those negative 5% days as a good buying day, right? And don't get caught up in the emotional roller coaster. So one of the things that I like, and this is why we trade the QQQ, is that since the bottom in October, the QQQ is now up by 44.6% from its bottom.
Right.
And the S&P 500 is only up 26%, a little over 26%. So it's like the QQQ is far outperforming the S&P 500 again, as I predicted. And I predict this will continue into the future as well.
I mean, that's what it was made to do, just like our fund has its purpose as well.
Yep. Exactly. It's not as diversified as the S&P 500, of course. But, there's all sorts of signs in the market that lead me to believe that we are in a new bull market and it's here to stick around. I don't think that we will see those lows again that we've seen in October, but I also don't want to make a prediction of that, right? Because I don't like making stock predictions. I don't like trying to figure out what a stock might do, as people know if you listen to this in other episodes that we've had. I'm totally against trying to predict what a stock price might do.
Yeah, you pretty much have one answer for all those questions. What is that answer, Chris?
It depends. So essentially inflation is easing, right? The Fed didn't raise rates this time when they had their meeting on Wednesday. They paused the rate hikes. That's a decent sign. The market sort of didn't like that. They've been up a little bit since that announcement. But the other thing is inflation is easing, and they're signaling that they might do a couple of more rate hikes just to make sure that they bring inflation down. They haven't changed the target. It's still 2%. In any case, I mean, I'm just getting at the fact that you can't predict this stuff, right? Like if you would have predicted the bottom on October 13th, like you'd be up 44% right now. Let me see you get those gains in real estate.
But yeah, the thing is, how can you predict it, right?
Yeah, you can't. All you can do is manage your emotion and have a long-term plan, right? Have a long-term plan and just keep taking profits and compound those profits as you go.
I don't think most people know how to do that, though.
I know.
Like if you ask somebody, if you ask somebody, you just pull somebody outside on the street, how do you take profits every day on the stock market, without risking everything?
Yeah.
That's a big caveat, right?
Yeah.
I don't think most people know how to answer that question. But I mean, that's what we want to teach. That's exactly what we want to teach.
Yep, exactly. And so, yeah, if people are interested in learning more about what we're doing, we're selling stock options. And, if you think of options as gambling, we're the house. I don't like to associate gambling with what we're doing here, but we are essentially becoming the house because people are going out buying stock options and they're betting on the price of a stock either going down or going up. And we are the house selling them those stock options, and we just collect the profit. And over 90% of our options that we sell expire worthless.
We don't have the comp rooms.
Nope. We don't have the employees.
We don't have to host Vegas shows.
No, not nearly the overhead. We don't have to serve drinks or anything like that, right? So we just clicking buttons in the computer and just understanding how to manage our risk.
That's just the electric bill to make the casino, stay lit up all day.
Yeah, exactly.
Yeah, we're actually very, very thin when it comes to expenses. I think that's a shining positive for us. I think I don't think other funds could compete to us when it comes to expenses.
No,
we just it's just something we have innate in us, that we like to save money. And that's why we jump, why we click. We like to save money. We like to do things frugally and find new ways to do things that other people are spending money to do.
Yeah. It's getting the value for the dollar, right? And doing what we can in-house and not spending a bunch of money on the ivory tower office building. You know, we don't need that kind of stuff with the technology that's out there these days, right? We don't need to spend $5,000 a month on an office building. We don't need to pay power, and we don't need to have 30 computers and screens all over the place and stuff like that, right? So yeah, it's quite easy to understand. And like, I've taught a lot of people how to do this actually in simulated trading, and they pick it up in like 2 to 3 months, even if they're only doing it like once a week.
And it's not really time consuming.
No,
Yeah, that's the strategy at all, which is
no. I
that's a
spend,
good
you know, 20 minutes. Like today was probably like one of the heavier days, and I spent like probably 30 minutes trading. And that's
Wow.
it. Like
Wow.
it doesn't take a ton of time. So
I meant to check in with you, like, what's going on today with the market's reaching a new high, and I was just curious, what's Chris doing today?
yeah. Well, the markets are down today, and like it's good for us when the markets are down. Like that's what we need. We need a pullback in order to end up with some shares, and we want to own some shares, obviously. I mean, we're in a new bull market, right? So sort of the way that we feel about this is like any opportunity or any downturn in the stock and the asset price is a buying opportunity. And we don't actually have to wait for the stock to decline in value before we can make money off of it. We just keep selling insurance against it and just keep generating revenue in the meantime, right? So we have produced a 7.6% return over the last 3 months. So things are going well. That's exactly as the models have predicted in a market situation like this. So the models we built are accurate, and yeah, I'm happy to get on a call with anyone and go over those models and show them how this thing's going to perform. And like those key performance indicators are just a way of us being really accountable for what we're doing and giving people an expectation that we can fulfill, like realistically fulfill, right?
Right. I mean, imagine if we were a fund that just shorted, just shorted stocks. A lot of hedge funds, they focus on shorting. What do their charts look like right now?
Well, I think people invest in those funds. They try to invest in those funds when they are trying to mitigate risk, right? But it is risky because they're out there betting on stocks, and usually hedge funds are betting on individual stocks, either rising or falling, right? Not necessarily all short funds. Some are a combination of short and long. And I describe us as we are a short options, long equity fund. So we sell options and invest in the equity for the long haul.
It's a different game than
totally different, yeah,
than shorting. And I think we have to kind of work on just making sure people know that we are different than what you might expect.
Yeah,
I know when you and I first met, I was thinking all these things. Where is he using? Is he using leverage? Is he shorting stocks? All the things that we're taught. They're too risky. Don't do that, right?
Yeah.
And you got the message. They are risky. We don't do that.
Yeah.
But
I can't handle that kind of risk. I don't want to trade under that kind of stress.
I mean, you can only lose so many times until you're out of business, right?
Yep, exactly.
We don't do cash calls.
Yeah.
So I think it's really important that we distinguish that there's a reason why we don't do those things, and that this on the long term works out in our favor, and it works out better.
Yeah,
it's much. Can we say the word safe? I don't know if it's safe to use.
It's risk averse. It's risk averse. Yeah, it's risk averse, and we retain liquidity, right? We're always trying to retain a level of liquidity, except in market crashes, because we want the money to go into stocks in market crashes. Right.
Because your dollar cost averaging.
Yep. Yeah. Exactly. So usually in market crashes, those are golden buying opportunities. We've seen this over and over and over. And so one of the things that I sort of wanted to talk about here is like bull markets always have lasted longer than bear markets. If you look back in the past, there is far more time spent in bull markets than there is in bear markets. And the longest bear market in recent history was the dot-com bubble, right? So that lasted, I believe the dot-com bubble lasted 5 years before a new bull market came into play. There was an 11-year bull market from 2007 to 2020. And then we entered a bear market in 2020 with a COVID crash that lasted like 6 months, like barely at all. And the recent bear market lasted almost a year, and now we're just entering a new bull market. So how long will the bull market last? I don't know, but typically longer than a year. So we don't want to like wait too long before we get into a bull market, or we're going to be buying in near the top of the market, right? So this is kind of like creating some urgency to like, if you have been following us, it is a new bull market by definition, right? It's not my opinion. It's a definition. You can Google it. 20% off the bottom is a new bull market. So there's less fear in the market, more greed in the market. Doesn't mean it's just going to continuously go up, but we're going to take advantage of that volatility always. That's what we're here for.
I think we should expect some volatility. I think either way, and I mean whether it's on the way up, on the way down, and if it goes sideways for a while, that's good too. That's great for us,
exactly,
because it works really well with the strategy. Whereas if you're buying and holding, you just have to kind of wait and see. But because you're not profiting all the way. And if it's a bull market, we're still profiting either way. So I mean that's the beauty of it. But there are some things, there's a lot of stuff in the market that even despite what's going on in the world, we're still in the bull market. I mean, I think that's significant too. I mean, we've got war, we've got the Chinese, I don't know, you call it Chinese aggression or just Chinese, what do you want to call it?
There's always a crisis going on though. There's always going to be a crisis. There's always going to be a reason that people think the market should go down. It should not be doing what it's doing. But let me tell you, applying logic to the stock market is the biggest mistake that most people make. Take logic, set it off to the side, and deal with what's in front of you on the screen. That's all you can do. And also, the stock market is so disconnected from the economy. It hardly ever reflects what's going on in the economy.
That's interesting. That's a good point.
It's very rare, very rare.
You don't have to enter why you're making this purchase or why you're making this sell. So nobody ever really knows why. We can only look and try and figure it out. But there are a lot of factors, and everybody's got their reasons.
There's so many reasons.
What's going on in the rest of the world.
You run into just a confirmation bias, right? If you just like run around looking for ideas and looking for reasons why, and like people make millions of dollars coming up with reasons why the stock market is going down or why it's going up. They make millions of dollars. I mean, look at CNBC, look at, all the stations and all the stock predictors and all of these news outlets that are covering stocks and the markets and bonds and all the public markets.
We love
right?
them all. We're not saying anything wrong with them.
No, but they're just
refer to them all.
But they also are not always right. They're very rarely right about what might happen in the markets. Like they do try to make predictions, and they do say, oh, I'm long this or I'm short this, traded or faded on CNBC, right? And like sometimes they fade it and it's rockets the next week, right? Like Nvidia is a prime example of that. They announced some better than expected earnings and it rocketed up 15% in one day. Like it's crazy. And then there was a couple of months before that were like, oh no, I don't like Nvidia at this price. And it's like, oh, if you didn't like it at that price, you're sure not going to like it 15% higher. Right? So Yeah, so I think we could wrap this up, and people want to get in contact with us, highly encourage that. We can meet with you, and just if you want to know more about the strategy, I'm happy. We'd have a transparency policy, and just like want to show people and educate people on what we're doing. It's far easier than real estate investing. It's very simple and transparent, and but it takes a lot of capital to do what we're doing. So just want to enable people to get into it, to get their foot in the door with less money than it would take to do this on your own.
Yeah, if I were to compare getting into real estate investing, learning all the different trades required, right, as opposed to getting into this kind of investing, learning from Chris, having Chris there, it's a godsend because I was looking to get into real estate, get back into real estate when I met you, and Chris was like, "I'm selling off all my real estate." I'm like, what do you mean? He's like, come see what I'm doing. I'm like, all right, let me check it out. And I had a lot of questions. I think I hit you with a lot of questions, and you had a lot of answers that really made me think and see things in a different light. And I appreciate that because it really turned on the light. Even it's brighter in this room now because
yeah.
I had to get a light for these videos. But I really appreciate it because it does change everything in terms of, if I look at the stock market today and like what's going on in the stock market, well, what is my outlook on it? If I'm typically an optimistic person, and I think overall I'm optimistic about what the markets, I know the markets want to go up. There are those that, don't in the short term because they want to make those short profits, and I get that. And there will be those opportunities, but there's that's risky, right? And that's gambling. But some people just are addicted to that. This is a lot less addicting. This is more like for the serotonin, more for the peace and the calm and the tranquility kind of thing, and just knowing
and sticking to the plan, right? Like just sticking to the plan and just staying consistent. And that's what a lot of life is about, right? Is just staying consistent, sticking with a plan and executing. And this is
and you've been doing that. You've been doing that for since March 1st live, and you've been doing it on paper trading for as long as I've known you. And I think you've got some other folks that are doing it as well, and they see it and they get it, And so I want to give you kudos, especially now I have an opportunity to do that publicly, because it's like you're doing it even if you can't see it, you're doing it, And so I just wanted to say kudos to you in person and in public.
Yeah. Thanks a lot, Laban. Definitely. All right. Well, if anybody wants to reach out, as usual, we'll put the links in the bottom of the comments of this video. And abundanceassetmanagement.com, can find all the information there, and contact information and everything. So have a great weekend.